How will the two-pillar solution ensure the stabilization of the international tax system and ensure that MNEs pay their fair share of tax wherever they operate?
Well, each of the pillars addresses different gaps in the system. Pillar 2 applies a minimum level of taxation, or ensures that a minimum level of taxation applies with respect to the largest and most profitable multinationals. And the objective is to allow countries to be able to have at least a minimum level of tax revenue that they will need to implement domestic policies and advance their sovereign interests without concern about having to continue to reduce their tax levels in order to attract investment. And there's already significant interest in the global minimum tax, and we've seen a number of countries already begin the process or express an intent to begin the process to implement. Pillar 1, on the other hand, applies to ensure that that there is a reallocation of taxing rates. Okay. Can I? Yeah. I have to check. Did I say the largest and most profitable multinationals with respect to Pillar 2?
I think you did. Yeah.
That's wrong. That's Pillar 1.
Okay. Just take it again.
Yes. Yeah. I'm going to start. I'm going to say yeah. Each pillar of the two-pillar solution addresses a different gap in the system. Pillar 2 applies to multinationals with revenue in excess of 750 million euro, and applies by establishing a minimum level of taxation through coordinated action by the various countries adopting the rule to ensure that countries are free to have a minimum level of tax applied in their jurisdiction in order to collect the revenues they need to advance their domestic policy objectives. And we've seen already a number of jurisdictions begin to implement aspects of the global minimum tax. Pillar 1, in contrast, applies with respect to the profits of the largest and most profitable multinationals, and the intent there is to reallocate taxing rights to enable jurisdictions to exercise their taxing rights, market jurisdictions to exercise their taxing right with respect to the activities of those multinationals, the sales and services provided in their markets. And that pillar is the principal focus of the outcome statement that was just agreed. And I should say that Pillar 1 actually includes two components. So the reallocation of taxing rights is amount A, and it also importantly includes an amount B, which is a simplified approach to transfer pricing, particularly with respect to low capacity jurisdictions where we don't see a lot of comparables. So the outcome statement that was just agreed is really an important moment to have gotten broad-based agreement on a package, which includes both the amount A, reallocation of taxing right, amount B, the second part of Pillar 1, so the simplified approach to pricing, as well as an additional part of Pillar 2, the subject to tax rule, which it also enables, in particular, developing countries to be able to, through their tax treaties, collect additional tax where income is not being subject to tax at a high enough rate. So the overall package is quite significant, and to get 138 jurisdictions to agree on this package of deliverables related to all three of those pieces is a really important momentous step for international cooperation.
So tell us about this new outcome statement.
Well, the outcome statement that was agreed at the 15th meeting of the Inclusive Framework, at the 15th plenary meeting, represents the culmination of months of work to complete the work on addressing the tax challenges of the digital economy. It's a package of deliverables that has three components. There's Pillar 1, the two components of Pillar 1, so the amount A, taxing right, as well as amount B, the simplified method for pricing. It also includes the continuation of the work on Pillar 2 in the form of the subject to tax rule, and that rule is a very important rule for purposes of developing countries being able to, through their treaty applications, be able to tax income that isn't subject to the full level of a minimum level of taxation. So the outcome statement is momentous because it acknowledges the importance of these three components. It approves the moving forward to complete the work so that we can, in the case of Amount A, deliver a multilateral convention once a few technical issues are resolved. With respect to Amount B, issue a consultation paper to finish the work. And then with respect to the subject to tax rule, issue a report and also prepare for an MLI for signature in the fall.
What type of support is planned for developing countries now that we've entered the implementation phase?
Well, the work on the two pillars has always contemplated the need to have significant support, technical assistance, and the ability to enable broader capacity to implement the pillars in order to allow countries, particularly developing countries, that need additional capacity to realize the benefits of these pillars. With respect to Pillar 2, there's already been work underway to support countries who are adopting different aspects of the global minimum tax, qualified domestic minimum top-up tax, or other aspects. And the range of support is both technical assistance, drafting, as well as helping think about an implementation plan. But the work on the pillars goes broader than the global minimum tax. And as part of the outcome statement that was just agreed, a very, very important component is a commitment by the OECD to build an implementation plan that will support developing country implementation of both pillars. And in the case of Amount A and the reallocation of taxing right, there will be support in helping with drafting legislation, implementing rules, understanding the multilateral convention that will be produced. And similarly, with respect to the STTR, there'll be additional support with respect to the MLI and implementation. Of course, in the case of Pillar 1, the nature of support will vary based on the decisions by countries as to whether they're going to sign on to the multilateral convention or the MLI. But the concept is the same. There's a recognition that in order for developing countries to fully realize the benefits of these significant policy changes, the partnership needs to continue, and we need to stand by them to assure that the technical needs are fulfilled.
What is TIWB and how will this contribute to the new work?
Well, TIWB, Tax Inspectors Without Borders, is a joint program between the OECD and UNDP that has been ongoing for over a decade now and has played a really critical role in supporting countries with audit and various other issues.
We'll
start over. But what it's not. So what is the word? It says decade. It says there a decade.
Yeah. We technically started in 2014, 15, so I don't know.
Okay, so you want me to substitute many years?
Maybe, yeah, many years, exactly.
And we said it's, what did I say? It's a partnership. We call it a joint initiative.
It's a joint initiative.
Okay, joint initiative. Okay.
Which has been working with developing countries for many years and highly successful in building tax audit capacity, with more than USD 2 billion in additional revenues collected for developing countries.
Okay.
Tell us a little bit about TIWB and the new work it's doing.
So Tax Inspectors Without Borders is a joint initiative between the OECD and the UNDP that for the last several years has been working to build tax audit capacity in developing countries, already having freed up more than $2 billion in US dollar, $2 billion USD in revenue. $2 billion USD in revenue. I know. Is that? Do you say USD or how was it?
Over $2 billion US dollars today.
Okay. So maybe can I pick it up from there? So what is the actual thing? Having freed up?
I've been working with USD 2 billion in additional revenues collected for developing countries, but it's not for it's by developing countries today.
Okay. So having resulted in collecting over $2 billion US dollars in additional revenue. The work is now gearing up to ensure that it will also help with, I don't know the word.
With auditing VAT on digital trade.
Auditing VAT. What is that? Help me understand what that is, because if I don't know it, it's auditing VAT on. Well, now I know.
It's basically, it's like digital trade. So Amazon. Can you explain auditing VAT on digital trade?
I'd like to know what I'm saying.
Auditing the Pearson, his team was into.
All right.
And also the another work stream is the effective and appropriate use of country.
Yeah, that one I've got. Yeah,
So,
that one I'm very familiar with. Yeah.
And practical implementation of global minimum.
Yeah, and that one I also face. So it's just the first one is that I'm the least familiar with. Yeah, it's abstract because it's not. Yeah. Okay.
But it's clear now.
Now it's clear.
Okay,
I got it. Yeah,
thank you.
yeah.
Fix your hair because it's slightly different.
Oh, okay.
Voilà.
Thank you. Okay.
Good.
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 So I'll start with building on the success, the prior success, and then say it's now going to be expanded.
Yes, exactly.
Okay.
Yeah, that's right.
So building on this prior success, the program is now going to be expanded to support auditing VAT on digital trade, ensuring access to country-by-country reporting and understanding information from country-by-country reporting, and then, of course, implementing the global minimum tax. With respect to the latter, ensuring that we're working with countries on evaluating their tax incentives relative to the minimum tax so they can be supported to determine whether those incentives are appropriate and how they'll fit within the regime is going to be an important part of the work. Of course, this work cannot be done alone, and in addition to the partnership and initiative that we've had with UNDP, it's important also to partner with other stakeholders who are helping support developing countries on these in building capacity, in particular regional organizations, international organizations, and other development partners.
You want to do one more time the TIWB part?
I
You
know.
did say something about ensuring access to CBCR reporting. We're not technically doing that.
Oh,
So
it was.
just effective and appropriate use of CBCR.
But it's also access, isn't it? Because there's a
Well-
whole debate about are they getting the information?
Exactly.
Yeah.
The thing is, we won't come in to implement our program until they have access.
Ah.
And then it's how to use that.
Oh, okay,
information.
effective use.
Exactly.
Um,
So I think maybe that's an important distinction.
Okay, okay, yep. So,
Okay, back up slightly.
So-
Yep,
okay, I'll try again. I'm going to start from building on the prior success, though.
of the initiative.
Yeah, okay. So building on the prior success of the initiative, now there's additional work that's going to be done focused on auditing VAT on digital trade, ensuring the use. Is it use? Effective use.
Yeah.
Okay, so building on the prior success, the work will be expanded to support auditing VAT on digital trade, helping with the appropriate use of country-by-country information, and of course, the implementation of the global minimum tax. And in that regard, with respect to the global minimum tax, there'll be support to evaluate tax incentives in jurisdictions to assess their compatibility with the minimum tax and the impact of the minimum tax on those incentives. Of course, we can't do this work alone, and it's important, in addition to working very closely or UNDP and OECD working very closely, it's also important to partner with other regional organizations, international organizations, and other development partners to ensure that we are maximizing the impact that we have in these developing countries.
Let's just start from, of course, the OECD can't do it alone, working with UNDP.
Do I want to say, the reason I hesitated there is we're talking about TIWB, which is not the OECD. So when I say the OECD doesn't do it alone, it sounds like I've pulled the UNDP out of it. So
maybe, of course, OECD and UNDP can't do
Yeah.
this work alone.
yes,
Rely on
okay.
Start from there.
So of course the UNDP and of course the OECD and UNDP has had a great partnership in TIWB, but they can't do it alone. It will be important to partner with other regional organizations, international organizations, as well as development partners to ensure that we are providing the maximum and effective support to developing countries. Yeah, is that okay?
That's better, yeah.
Yeah,
Does it feel
okay.
good for you?
Yeah,
Okay.
yeah. As long as I'm done, I feel good.
I know. Done? Wait. You have a good story? Let's do the last one more time.
Yeah.
And smile at me at the end, because there was a hesitation.
Okay.
Am I done?
It's like, am I
And then you
done?
smile.
Yeah,
It's a
exactly.
beautiful smile, but it's
You could
very
cut the
good.
middle. You could splice it out.
It's
You
hard.
could
We
draw on.
would do the best. So real quick, just, of course,
Okay,
OECD and
yeah,
UNDP can't do this
yes.
alone.
Uh-huh. Well, of course, OECD and UNDP have worked very effectively together on this initiative, but they can't do it alone. And it's important for the OECD and UNDP to partner with other regional organizations, international organizations, and other development partners to ensure that the most effective support for developing countries to serve their needs.